Understanding the needs of your consumer is an essential part of real estate development, especially in an emerging market. With the rise of the African consumer, developers and investors alike need to keep abreast of consumer trends on the continent. Now, joining me in studio to tell us more is Tracy-Ann Mooney, the Managing Director at Fernridge. Tracy-Ann, thanks so much for joining us today. You know, we know that the African consumer is growing at a rapid pace. We've been seen as the last economic frontier. Tell us about bridging the gap between feasibility studies and research and how that could assist potential investors.
Well, bridging the gap between feasibility and the actual consumers themselves implies naturally that one needs to know precisely who these consumers are. And I think in the past, historically, there's been very little understanding of income levels, for example, in cities such as Lagos, Kinshasa, Kenya, Nairobi specifically. And it's being able to identify a low, middle and high income potential, if you like, within these African cities, these contexts that are perhaps somewhat different from our own. It's also key to perhaps look at the greater field of research and Africa. I think in the past, a lot of research work that focuses on Africa is very much a generalized product, a product that looks at a synthesis of macroeconomic factors. And this implies a top-down research process, which in our minds for emerging markets, a bottom-up process is required, a very granular micro approach. Are
you talking about the African consumer and the context within the place that we found? How does this then perhaps change the way that we view investments going forward, and how can it? I mean, obviously we don't really understand a lot of the African consumers and the infrastructural needs that they obviously require down the line. Tell us about Fernridge and how you have created a very specific methodology to unpack some of these challenges.
A very unique methodology. Our work is geospatial, which in many respects is looking at a city. We'll take an example, looking at Nairobi, and being able to isolate every single household within a specific suburb or within the entire city boundaries of Nairobi. Once we've done that, we then allocate an income and expenditure value using a fairly complex research process to each of these households. In turn, we understand basically what every household on a micro level is able to spend based on income, and in fact where consumers spend. One of the very important aspects of understanding African cities and their changing dynamics, being emerging markets, is understanding the flow of money. Now, money moves. If we consider Nairobi, for example, money will be concentrated, spend on a daily cycle will be concentrated in the CBD area of Nairobi, as opposed to the more outer-lying residential suburbs. Perhaps that may be a symptom of required convenience-type shopping facilities, which haven't been developed yet. So we like to take into consideration the household itself and the behavior of the family within that household.
Taking a look at property development, real estate development, whether it's for retail uses, commercial uses, or whether it's just pure property, do you think that a lot of investors are getting it wrong?
Interesting question. Yes, I think that, again, there's a lot of misconception about Africa, and perhaps a misconception around the risk profile of Africa. And I certainly hope, and we certainly believe, that that risk profile is starting to change rapidly. If you look at the vast capital inflows into our continent, this implies that our marketplace is going to explode. I also think that the arrival of Massmart, Walmart partnership is key here, simply because it is clear to me that both businesses recognize the potential of our African consumers, our billion consumers.
And we also need to appreciate that there are about 53 countries on the continent, and they're all vastly different. Consumer needs vastly different, and this is why many multinational companies get the story wrong and also fail in Africa. Let's look at it in the South African context. When we look at Johannesburg, many say that we have not built Johannesburg in the most efficient way possible because the infrastructure is not efficient enough to deal with some of the developments that we've seen. Would you say that this is the case, or do you think that things are changing rapidly?
I think it's very difficult to comment in the case of our city, simply given its size and its history and its long historical trend of development. What is very interesting is that there's a process of urbanization in place, which really means that you'll find businesses and households migrating back towards the city centre. Now that has interesting implications for us as consumers, consumers living in these areas. It then becomes pertinent to have a train station in Braamfontein that is easily accessible.
But the retail space hasn't really followed suit with that trend, with consumers wanting to go live back into the CBD, because why would someone want to live in the central business district if they can't wake up on a Saturday morning and be able to go and
go shopping? Absolutely. It's almost as if it would be an ideal world if both retail and property development merged and was in the same place at the same time in terms of where a city is developing to. That said, it is a timely process. Earlier on we were talking about Lagos. I think Lagos is a very interesting example. If you look at retail, formal retail, mall type developments in Lagos, there's clearly a shortage of those. We understand that the consumer demand is very, very large. This is what we do, is map consumer demand and supply to that demand. So in the case of Lagos, if you look at visiting a ShopRite store, for example, you may experience difficulty in getting to the store. This is not poor location. This is rather the existing or lack of existing infrastructure that does exist in Lagos.
And Lagos, they say, bursting at the seams at this point in time, a massive need for the likes of infrastructure. You also operate in various other territories, Kenya, Botswana, Namibia, Zambia and Ghana. How do these cities differ from each other, and what kind of investment needs from a real estate perspective would one then require?
Each city is remarkably different, and again perhaps we go back to an earlier point as why so many many have gotten it wrong, burnt their fingers in Africa, is that each of these countries and cities, these urbanized areas, need to be treated as unique, simply because they are unique. Their history, their evolution is entirely different one from the other.
Let's look at property development trends on the continent at this point in time. Obviously, you operate in vastly different territories, and it seems that your methodology, even though you're operating in such different places, it seems to work quite well in each of these territories.
Yes, the methodology is precisely the same. In fact, we can work in any emerging market on our globe, given our basic measure of collecting data around each household. What's key here is we see there of course is great growth in property, looking from a lower income residential demand. There's a strong growth towards middle income residential demand in some African cities, for example. That's important. Clearly there's a need for more formal retail developments, perhaps mixed use and commercial developments, because of course as your consumers grow, their discretionary income grows, so business arrives, so the economy uplifts.
Thank you very much for your time.
My pleasure.